Hello again, traders. Jason here with Forex Traders Live. Wanted to take a quick minute and walk you through a day trade that we went through using ratios and pattern recognition in the live trading room today. And if you take a look at this, we're looking at the euro-yen on a 5-minute chart just to orientate you. And what I want to do is take you through the progression and the thought process that we had in the live room as we began to analyze this market coming into the day. We're looking at the 6 o'clock candle here. That's when our live trading room opens up here. And we go ahead and look at Fibonacci swing high to swing low and back again. Initially what we were anticipating was a press lower down into a 127 extension, potentially a 1618, completing an AB equals CD move and giving us a nice buy opportunity. In this case, the market didn't choose to do that. If I go ahead and walk the market forward, we see that the market decided to rally instead. Now, one of the things that we always want to be cognizant of, traders, and what I teach in the live trading room to my clients is that you want to be predictive in your analysis, but not in your execution. It's okay to predict what the markets may do, but until the market actually does that, it's not okay to act. So we go ahead and waited for the market to press down. We didn't get that, and the market began to rally, and now we have to look at new opportunities. As the market pressed up, and we saw it put in an initial high and then a very shallow pullback, the next thing that we look for, and I began to identify it here after the break of structure, is the potential AB equals CD and Gartley pattern that was setting up. If I go ahead and draw in my lines, swing low to swing high, copy and paste, and then I draw in my Fibonacci extension, swing low to swing high, and back down in, what you'll see is we get a nice AB equals CD pattern right near the 1618, and looking left below the swing high, we can go ahead and draw in our Gartley pattern here. X to A to B, B to C, C to D, giving us a little Gartley pattern. Now, we have to wait for the market to come up into that 1618 area, and as the market pressed up in there, we began to see the market hold structure. Take our short position, stops above the swing high, stops were not taken out, and we began to look for a retracement. Retracements came in at around 117. Let me see. I've got my list right here. The target one came in at 117.71. 117.71, right about there. And as we watch the market follow itself through, market rolls down, target one is attained, stops now move to break even, and as the market pulls back, we're stopped out on our trail stops. All in total, traders, about 44 pips of profit there. Very, very quick trade. A nice little profit for the day, and that just gives you an example of a nice ratio trade, and it should show you, traders, that you can use ratios on any market in any time frame to make money. They're not just restricted to a specific time frame. They're not just restricted to a specific currency pair. If you understand structure, if you understand pattern recognition, support and resistance, market harmonics, and you understand what you're looking for, it's very, very easy to recognize opportunities that occur in the market that you can trade using Fibonacci, ratios, basic structure, support, and resistance.